This is fine. Okay, so I started with this question of how many of you already are investing into SIPs and mutual funds, and there are about 10, 12 of them who was raised. I would urge that the others also should start. And why is what I'm going to cover today, okay? So let's start, by looking at this in terms of all of you are currently into education. And after some point in time, you're going to be getting into job, right? But this education is means to what? It is means for you to get into your passion, right? Profession, business, or employment. This is the means for you to get there. Now let's look at one of, each one of it. So the passion, there can be different passion, which is there, your sports, photography and modeling. In terms of profession, it can be becoming an architect, doctor, advocate. But yeah, for all of you, there's one line which is there. So all of you are getting into that. But, and in terms of employment, it is marketing, sales, finance, and business is startup, trade, family owned. Now coming to this point that, all of you are doing, getting into a job, but getting into a job eventually has to lead to a financial reservoir for you. And that reservoir should help you in terms of meeting your goals or requirements which are there. अलग-अलग टाइम पे आपको अलग-अलग requirements होती हैं और उस requirements को meet करने के लिए आपको पैसा चाहिए होता है और वो पैसा आपके रिजर्वायर से आ सकता है एंड दिस रिजर्वायर इज व्हाट हैज टू बी क्रिएटेड उसके लिए आपको कैश फ्लो चाहिए एंड फॉर दिस रिजर्वायर टू बी क्रिएटेड फॉर यू नीड टू बिकम द फाइनेंशियली इंडिपेंडेंट एंड यू कैन रिटायर अर्ली व्हाट वाज द रिटायरमेंट एज अर्लियर around 60, right? But today all of you want to really have the retirement age till 60? Yes, no? No. You would want to retire early, right? So retiring early is something which nowadays everybody wants to do that. And it is possible. It's possible, but there are certain things which you have to follow. Now here is a very known recipe, at least from the mutual fund industry perspective. We have seen this on a very regular basis. What you see here is a small saving of about 15,000 rupees per month. If you have saved it for 25 years and you have got a 12% per annum return for that. Now I'll come to that in terms of, how this, this 12% is, can be looked up to. What is the wealth creation you have is about 2.82 crores. That's the, amount it would eventually lead up to. What is it that is required for you to get there is discipline. And this is something which everybody kind of, fall flat on, including myself. I started my journey in this industry in 2001, 25 years completed. But I can tell you that there are many mistakes which I myself have made despite being in this industry. And that is basically about investing for long term. Do not stop your investment. Keep your goal intact and, invest in the right way with a reasonable expectation of your returns. That's what you have to do. Now, all of you are going to get into jobs very soon. Whenever you're completing at that point in time, you're going to get into jobs. And from that point in time, you must start. So the mantra for you to get to this reservoir and make this reservoir for you is 1, to begin early, 2, use the power of compounding. And that basically means invest for long term. And 3 is that you have to make sure that you're investing into something which is helping you to beat the inflation. There's price increase which is happening every time, right? So आज जो आप जिस चीज पे खर्चा करते हो उसी चीज का अगर 1 साल के बाद आपको चाहिए उसी चीज को आपको ज्यादा पैसा देना पड़ता है. And that is the difference which is there. So that is nothing but the inflation. So you need to invest into something which can get you better return than the inflation, and it is keeping you ahead of inflation. अगर inflation के equivalent ही है आपका investment return, तो आप एक ही जगह पे भाग रहे हो. Then you are on a treadmill. You're not moving forward. So you need to have better returns as well. So the first thing is about begin early. And this is an example of assuming that, you know, आप लोगों ने सब लोगों ने, let's assume you get your job, and from there you didn't start the investment. मैंने अभी बोला कि आपको beginning में investment करना, but आप भूल गए, बाद में कभी याद आया, and you started this investment at the age of 30. From 30 till 60, let's say you did this investment. This is of 10,000 rupees per month, and if you've done this 10,000 rupees per month, you got 9% return. In some investment where you got 9% return, the amount would be 1.83 crores. That's the 30-year journey. And then comes the next one. If you had done 12%, you got 12% return, it would actually amount to about 3.49 crores. Now here comes the bigger one. Assume that you already have an investment because your Dadaji did your investment for you at the beginning, right? And that investment is continuing for you for 10,000 rupees. And you, by the time it gets to 60 at 9%, the same thing which we saw in the previous slide would now be at 28 crores. Anybody wants to take a guess? How much would it be at 12%? 129 crores. That's the amount it will be. It's a very plain, simple math. All of you would know about the formula for future value, which is the present value into 1 plus r raised to n. In this, the present value is there, 1 plus r. R is the rate of return, and n, which is the number of years. Which one is the most powerful in this? N. I don't think I need to tell you about this. All of you know about it. N is the most powerful out of this. So it's the number of years which makes it this big. And this is a simple calculation which is there. If you do this calculation, you can find the first 10,000 which is invested for a total of 60 years time period. And that 60 years, this 10,000 would have grown. Same way you are investing every month. And, you know, obviously that amount, every 10,000 is increasing. And that's what is taking you to about 129 crores. That's a huge amount which it can get to. Now, if you think that 12% is something which is very difficult to get, markets have actually given this. Markets have given. This is the, the BSE Sensex. From the inception time period onwards till today, the CAGR, which is the compounded annual growth rate return, which it has delivered, is about 15.01%. 15% का रिटर्न दिया मार्केट ने. आपको कुछ नहीं करना है, बस इन्वेस्ट करना है और धरे बैठना है, कुछ नहीं करना है. You don't have to do anything. You have to just invest. It's more like fill it, shut it, forget it. Don't have to be worried. Because the markets are volatile, but with volatility, it is on a longer term basis, it is an upward trend. And it has delivered this return, which we see. And it is not that, it has happened only in the recent past. ऐसा नहीं है कि ये अभी हुआ है. ये आप पहले भी देख लो, यही है. Returns अच्छे बने. Now this return may differ, time to time, but equity markets are one of the best in terms of investment. Every product is different in terms of what they provide you. बैंक में इन्वेस्टमेंट जब करते हैं, बैंक में डिपॉजिट डालते हैं, तो उसका जो एक्सपेक्टेशन होता है, उससे जो एक्सपेक्टेशन होता है वो अलग होता है. म्यूचुअल फंड में लोगों का जो एक्सपेक्टेशन है वो अलग होता है. वहां पे आपका पैसा मार्केट में लगता है, इक्विटी मार्केट में लगता है. तो वहां पे जो रिटर्न इक्विटी मार्केट्स में मिलता है, उसमें रिटर्न के एक्सपेक्टेशंस जनरली थोड़ा बेटर हो सकता है. एंड दैट इज द एक्सपेक्टेशन विच which the markets have been able to deliver as well. Now let's look at the cost of delay. यही चीज कि आपने अगर जो इन्वेस्टमेंट किया, उस इन्वेस्टमेंट में आपने थोड़ा डिले कर दिया. So then what happens? Here is the case where you can do as SIP. And अगर SIP आपने शुरू किया 25 साल पे, आपका उम्र 25 साल और आपने उस टाइम पे स्टार्ट किया, at that point in time you had started. If you wanted to build a 1.5 crore sort of a corpus at the end of your 60-year tenure, then from 25 to 60, that 35 years, you just have to do 2,300 rupees per month SIP, that's it. But if you delay it by another 5 years and start at 30, then you have to double that amount. 35, again double the amount. 40, again double the amount, and so on. So what you find is that every 5 years, you have to actually double the amount. And that's the cost of delay. So do not delay. If you want, if you're planning to build that reservoir, start right at the time when you are, getting into the job. In fact, some of you have already started, which is very good. Please continue that. Do not stop. मैंने अपने खुद के investment में मैंने ये गलती की है. I stopped it in between. And I, purchased something else with that, a flat with that. Honestly, that didn't work out. If I had kept the money there, continuously investing, it would have been better for me. When I look back, that's what I find. So, invest continuously, do not stop, and do it as early as possible. That's what you should do. So, now let's look at the cost of delay in a different example. The SIP start age is 25, monthly SIP of 15,000 rupees. Return per annum calculated is at 12%. Investment till the age of 60. So investment is for 35 years. Total investment which is done, which is 15,000 per month, every month, whatever is the amount which is invested. ये अगर total करते हैं, तो that total amount comes to about 63 lakhs. At 12%, it would have accumulated to about 9.6 crores. Now let's look at Suresh. ये रमेश था. अभी सुरेश ने क्या किया? Suresh started at the age of 45. Same 15,000, same 12%, same 60 years. But his investment has grown only for 15 years because he started at 45. And the total investment which happened is about 27 lakhs. And this amount accumulated to only 74.9 lakhs. Look at the loss which he has, about 8.9 crores just because he delayed it. That's the cost of delay. Understand this cost of delay. Because if you delay, then you can't get it back. Time is something which you can't get it back. Suresh is another example. Same, he started at 45. He increased his amount to 35,000 rupees. Rest of it is same. The total investment amount is 63 lakhs. The total accumulated value comes to about 1.75. It still is at a loss versus the other. It's an opportunity loss which is there. So delay can cost pretty heavy. Now, let's look at, so there are a few things. One is to start early and keep continuously doing investments. So the first is where, Alisha's example is given. SIP start age is 20. SIP amount is 5,000. The amount at the age of 40. Now here we have taken the example at the age of 40, right? So you can probably plan for a 40 also, because that's lesser number of years, but you're trying to do it early so you can get to your goals early. The 46 lakhs is the amount which it gets to. Sharan starts at the age of 25 and 5,000 is the amount. 24 lakhs is what he gets to. Basically because of that 5 years delay and almost half of what it was in the other case. And Vaibhav starts at the age of 30. He invests 10,000. He's increased it. He's doubled it. But his amount eventually is only at 22.4 lakhs. So delay of 10 years, despite double of the amount of Alisha, the amount is less than half of Alisha. That's the issue which is there in terms of delaying. Now, what is the best? Ishita is the winner because Ishita started at the age of 20. She did it for 5,000 rupees and she increased it every year by 1,000 rupees. And the total amount which ended up was about 1 CR. So the mantra is simple, the mantra is very simple. You have to start early, keep on investing for a longer period of time, do not stop, and use the power of compounding. Now here is the power of compounding. This is what Albert Einstein has said. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Let's play a game. Yeah, okay. So, if you ask your parents for a pocket money starting with rupee 1 and double it daily for a month. So the first day is 1 rupee, next day is 2 rupees, then it is 4 rupees, and then 8, and so on. It just doubles every single day, right? What do you think would be the value on the day 31? Jan 1st you started and it goes on till 31st of Jan. What would be the value? Now, you have options here. 10 lakhs, 1 CR, 10 crore, 20 crore, 30 crore or more. 30 crore and more? Okay, since we are talking on this topic, yes, 30 crore and more. That answer is right. But how much would that value be? It's about 107 crores. That's the power of compounding. Let's continue this game. This is, can anyone guess who is this? Birbal? Yeah? Now, if you were to do this on the chess board and do the same thing, it's a gold coin. You keep one, double, 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 and so on. How much would be the value at the end? That's the question, right? So it is being done, and the gold coins will be the number which you see above, which is 18 quintillion, 446 quadrillion, 744 trillion, 73 billion, 709 million, and 600,000. That is about 1,84,467 trillion. So equivalent to about 1 lakh crore. That's the power of compounding. So, that's something which we all need to understand. And for that to play for you and, benefit for you, you need more number of years. Now, this is the same formula which I said, which is future value is equal to present value into 1 plus R raised to N, and of which the rate of return, which is the R, and the time, which is the N, these two are very, very critical. Because that is what can actually multiply your money. But most important is the time. So, in the equity markets, just think about it. What is the kind of, returns which it has generated? It has generated about 654 times return in the last 45 years journey. But there is a challenge, which is, and why is it that, you need to be into investing into equities is because of this one thing, which is called inflation. Yesterday's, this is what your inflation can do. In 2000, what was 10 rupees is today, in 2030 would be at about 51, and so on. All of these things. Higher education, to my mind, is even, it's already at this level, and it can be much higher than this, right? So, yesterday's luxuries are today's necessity. Just that the look and feel has changed, and today it has become a necessity. Everybody wants it. And the lifestyle is also changing. So, the inflation is not just about the price increase, it's also about our lifestyle. And if that's the lifestyle which is required, then you need to plan your finances very well as well. So, from a return perspective, the best, in the long run, equities deliver the highest returns. And that's proven. In 2007, June 2007, when iPhone was first launched, the price was about $500, and that value, of course, today is much lesser because the prices have gone down. But at the same time, instead of buying the iPhone, if you had purchased the company share of the same company, you would have got about 125 shares, and that will be about 63 times in USD terms and in about 112 times in case of INR. That's the power. So instead of buying the phone, you could have actually purchased the particular company itself. Similarly, this Maruti, 3 lakhs was the price in 2003. Today, value would be about 15,000. That's about 20 times lesser. And on the other hand, if you had purchased the same share, it would be about 103 times. That's how the growth in the the equity markets happen. But of course, these are not things which we may know about as to which stock to buy, which one to buy, sell, etc. How to make that portfolio. So one of the best things to do is to hand over that money to the mutual fund houses. They can do that management for you. There are different funds which are there, and when you're investing into those funds, each of these funds have portfolios which are 30 stocks, 50 stocks, 70 stocks, and so on. And those portfolios are designed to kind of manage this part of buying, selling, etc. because that's what they do. That's what the professionals who are sitting there are doing. That's what our mutual fund houses are supposed to do. So for you, you don't have to really get into that. You can be concentrating on your job and everything else which you're doing. Let this job be done by the fund managers or the fund houses. They are anyway doing all this. You can hand it over to them and they can take care of this. So financial independence, the 3 big mantras: begin early, power of compounding to be fully utilized, and lifestyle inflation which has to be met. So for you, you have to keep on, keep that and keep at it. You should not stop. And over a longer period of time, equities are the best, in terms of returns. That's what the history tells. And if you want to get that benefit, then you need to be doing your systematic investment. There are 2 forms of investment. One is the systematic investment, which is basically where you're investing on a monthly basis or at a particular frequency. The other is where there is a lump sum investment being done. So there are 2 types of investment. SIP is not a product, it's a facility. It's a facility to invest into any mutual fund, either in a recurring format or in a one-time format. The recurring format is called as SIP, and lump sum is what your one-time investment is. So with that, I would conclude. Thank you.